Yeah, look, we think what the market is looking for is again this trend of disinflation that we've seen all year, and that would open the door to the Fed doing its first rate cut in this cycle in September. I think anything that suggests aggressive disinflation from here would raise expectations in the market that the Fed would become aggressive, and that's where these 50 basis point types of cuts going into year end start to come into play.
What about this Middle East tension, Iran's potential attack? Some are saying it could happen as soon as this week. I would imagine it's something difficult to perhaps to model ahead of the event itself. But how do you position ahead of that? I mean, the saying goes, sell the buildup and buy the invasion.
Yeah, no, look, the Iran situation is quite interesting in that energy markets in particular haven't reacted meaningfully to those kinds of risks. So essentially what the market is assuming is that we're going to see an outcome very much like a few months ago, where it was a fairly modest retaliation, the missiles were shot down, and there's not much more escalation from here. And so I think that's a fairly optimistic assumption. Just like when we look at the economic assumptions being made with regards to inflation, the market is taking the more optimistic assumptions on a number of issues at this point.
Once the market finds its bottom, what are you telling your clients in terms of a global allocation and the type of assets? What do you want to buy once you know the dust has settled?
I'm not sure you ever really know that the dust has settled on a number of these issues. I think the question is on a risk-reward basis, where is essentially low entry risk or high-risk exit opportunities. And so that's really what we're looking in marketplaces right now. And when we look at that, the bond market looks to us as overly optimistic in terms of pricing the risks of slowdown and rate cuts looking through 2025. The equity markets at this point still are fairly optimistic on an earnings perspective looking into 2025. And so we still want to be very cautious about what we're choosing in terms of opportunities in the marketplace here. So we're fairly selective.